As a company planning to list this year, naturally we've got the market's interest peaked when it comes to your results. As I've said, pre-tax profit up 20% for the 2010 period, revenue up 25%. Run us through your major growth drivers right now.
Yeah, actually pre-tax profit is actually up 100%. We actually doubled in terms of profit after tax. Revenue was up 25%. In terms of the key growth drivers, we've really seen huge growth in terms of demand. So top line is up. We've been able to control costs. So that's really led to a growth on the bottom line. The drivers actually have been quite balanced. We're seeing growth on our power division, which has grown at about 25%. But huge growth is coming through on our engineering division, which has grown about 88%.
Of course, the focus for the company has been that infrastructure sector. We've had the company investing in East African cables, a transformer manufacturer in Tanzania, Rift Valley Railways as well. Do you see the scales tipping at all, or is that the focus for the short to medium term?
No, the focus for the short to medium will be across power, transport and engineering, and some of the investments you mentioned are really going to be the key drivers. If I maybe take a few, East African Cables, Tanelec, we've just tripled capacity of all of our plants. The reason being is that we've really been at full capacity utilization in 2010. So we're really going to be seeing further growth expected in terms of both the top line and PAT.
Of course, you've highlighted the fact that you've managed to keep costs pretty well managed as well. What are some of the cost factors you have to take into consideration, and how are you managing that force?
Well, what we've really done is try to build scale, and in building scale, we've really been able to manage our overheads. So that's one. The second is really using technology. We have invested heavily in much better and improved modern technology, which is also really helping us to reduce our staff costs.
Of course, the market's interested in future growth and prospects for the year ahead. In terms of that, what exactly are we looking at?
In terms of future growth, we're expecting growth to come through from three key areas, really. The first is the capacity expansion programs that I've talked about. Those are likely to come through from our cables, transformers, and switchgear manufacturing units across East, Central, and Southern Africa. The second growth driver that we're expecting to see is from our engineering division, where we've really had a strong pipeline of projects. And the third, of course, is from the turnaround of Rift Valley Railways, as that continues to perform better.
We're looking at the potential listing of the company on the NSE later this year. Run us through what we're actually looking at here for viewers that haven't kept up with the developments that this company is making, because the last time we chatted you said that the rationale behind your listing was not to raise capital as such, and we've seen some commentary this morning specifically out of Reuters saying that TransCentury listing shares on the NSE is with a view of expanding its capital base by $37 million.
Yeah, sure. TransCentury today is a public company here in Kenya. Our shares trade on the over-the-counter market here in Nairobi. That's sort of analogous to the pink slip market. So what we're really doing is moving from the OTC onto the main exchange. And we're do that by a listing by introduction as opposed to an IPO in terms of offering new shares. So the listing itself is really a listing by introduction as opposed to a capital raise in terms of an IPO. I think maybe the Reuters might have been thinking of previous initiatives that the company has had in which it has raised capital for its capital expansion programs.